your pecking order in terms of valuations at that return expectations within the listed space for housing finance?
Yeah, so see, I think the first answer to your question is that we have been negative on this housing finance space since June of last year, when we said that supply is not keeping up pace, and maybe there will be disappointment in terms of growth. And then we got lucky in the sense that interest rates also started supporting the same argument. Interest rates went up. So our simple take is that, see, in India in the last 20 years, all the fund managers and the foreign investors, if anybody wanted to play the India housing story, they used to play it either through the housing finance companies or through the building material companies like Asian Paints or Century Ply or Green Ply, because the builders themselves were, there was a perception that they are not clean and they don't operate in a way that investors would like. But I think after RERA, a lot of that has changed. We are seeing actually huge market share going to organized developers, and which is why I think that some of the fund flow will also go there, and housing finance as a sector will structurally have lower valuations than in the past. Also, second thing you should appreciate is that in 2012 there were just 2 AAA rated housing finance companies. Today there are 7 of them, and then you have these public sector banks which have nothing else to do except housing finance, and they have completely squeezed out the margins from this sector. So I overall think that though housing finance is a very important sector, the multiples will be far lower in the future than it has been in the past, and we think that in housing finance, being AAA rated and being diversified is one of the best way to navigate this. So there are only 2 large companies which fit into this criteria. One is HDFC Limited, and second is Diwan Housing. So they have a good 20-30 year history, they have a AAA rating, and they have a decent experience in terms of underwriting also. So these 2 are the only housing finance companies where we have a positive outlook, where we think some returns can be expected. I think for the other stocks, we think that there is still some more time correction which will happen, and then then maybe once the multiples reach a reasonable level, they will give returns which are linked to their revenue and profit growth. So that's a very short outlook. So we have a the buy is on HDFC and Diwan, and the rest is all either hold or sell. Be it the PNB Housing, or be it your Repco or Grow Finance, or any other housing finance companies.